Good morning, everybody. Today is Monday, 17th of January, 2022. My name is Heritage Adisa, market analyst at HotForex. Quickly, as usual, we'll check through markets, see what the dominant sentiment is, what the overall mood is in the markets, the big stories, what are the driving forces or the moving parts, if there are opportunities, and yes, if there are, how we can take advantage of it. But please always remember that this is just a communication material and nothing in this communication should be considered as investment advice or investment recommendation. Users acknowledge that investments in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. What we have this morning in terms of the overall mood in the market, overall sentiment in the market, is more of a mixed start to the day. First of all, moves are calmer, markets are calmer generally to start the day. I had this written down earlier. I said it's a calm start to the trading week ahead of US bank holiday, right? To honor, Martin Luther King Day, right? Generally, we've seen asset classes really remain in a range. You can see price action in most asset classes are contained so far. And it really might continue like this for the most of the day because we have a light economic calendar. It's going to be lower volumes come the American session as well. And it might be until tomorrow before we get anything major in terms of new moves or in terms of, solid price action, right? But still on still, markets remain markets, right? We can still be surprised, but usually you expect major bank holidays like this to cause, lower liquidity, lower volumes, which could, increase the chance of high volatility because of the lower volumes that we had. And also we could almost see very, very thin and slow volatility for the rest of the day. So there's that to have at the back of our minds. But one of the major stories this morning, we had the first Omicron case in Beijing, China, right? And then because China has a zero COVID policy where they don't want to hear it, right? Any single case like this, lockdowns, restrictions here and there. And then we've seen restrictions now in Beijing for travelers into Beijing. Now, the reason why this might be a worry is because, first of all, a lot of supply chains, the restrictions are going to slow down supply chains, slow down supply generally, and it could even extend to global economic recovery and even slow it down as well, right? One of the major economies in the world responsible for a lot of, trade trade volumes as well. So there's that to watch out for. If this worsens, like I said, this is one to watch. If this worsens, the cases keep being massive, the restrictions continue to increase as well, right? It could cause a lot of worries, for markets generally. So there's that to watch out for. Apart from that, we also had, the PBOC, that's People's Bank of China, reduce or lower interest rate on 1 year, medium-term lending facility loans, right, to financial institutions. Now, this also is in a bid to try and help stimulate growth, try and help stimulate the economy, find ways to support the economy as well, right? If we have restrictions still come in place, massive impeding or slowing down economic recovery there in sort of in China, obviously it can extend to the global economy and obviously not good for equities, right? So there's that to watch out for. Apart from that, in terms of focus for markets will be interested in expectations for central bank tightening or monetary policy tightening, right? And we have the BOJ tomorrow, right? The Fed coming in, later next week, already into the you know no speeches from federal members, right? The week already, just before their meeting later in this month, right? So we have that already in play. But I think markets will focus on inflation right now, focused on, monetary policies, central banks right now. But in the meantime, for now, we have lower volumes, lower liquidity, and that is really playing out in the day. For equities, we have a mostly flat start of the day. Amidst this mixed market sentiment, US 500 is just circling around, 46.50. Oil, on the other hand, is well supported, right? Pushing higher. We'll get back to that now in a bit, right? The VIX is, okay, let's just quickly look at it so that, we can talk about it as we see it. Now, for equities, for example, if you look across the equity space, starting from the JPN side, where we have, today flat session, go to AUX as well, really messy. Yes, you can say tick higher, but I mean, first had a dip, and now we are up here as well. Across to the UK, the FTSE, now we're starting to see ticks higher, but I mean, you can see the wide swings. And even this session, we didn't really have so much going on just yet, right? You go to the US 500, also a flat start to the day, right? Keeping below this 46.50 and well below this key area of resistance right now. So we also have that to have at the back of our mind. If you look at this, remember I always said, or I've mentioned for a couple of sessions now, yes, equities keep being supported. We are into earnings seasons with banks set to report. We had some on Friday. We're having some again tomorrow as well. right? There's that to play out. That could also affect equities as well. Also want to play out, in our minds. The buyers have always been on their game in this. So even if we get pullbacks, obviously we still need to be wary of the buyers. But with COVID restrictions in China, with tighter monetary policy clearly from the Federal Reserve expected, obviously that could see reason for equities to see further downside or see at least some pullbacks, right? So there's that to still watch out for. But as long as we keep above, keep the trend, keep above the both moving averages, at least the 100 in this case, right? Above this key support level as well. Bulls are still very much in control. If you look over to the VIX is also still meandering around this 20, barometer level. At this key level of resistance, turn support, very, very interesting to watch out for. I like to see VIX below this, well below this, to give me further strength in my bias for, upside for equities. But until we get, something more clear, you can see today's session, nothing much going on just yet. Until we get something more clear, I will really be on the sidelines just yet. I'm a bit more patient and wait out for something more tangible to work, with. On the bond side, bonds are keeping lower. Right now, we gapped lower in the start of the session. Now we're recovering some of those moves, repairing some of those moves, but we are below this key level, going back as far back as 2019. If you take it up a notch a bit, okay, let's leave it at 2019 there, key support level, and now we've got below the level. If bonds keep being pressured, yields keep being supported, it's good for the dollar. But until we get something more clearer in terms of maybe shorter sentiment, risk on or risk off, something to give us, more conviction with these moves, I will still be very patient on this. Remember, we could still see this play out as a false break pattern, but obviously it's a key level of support, that we also need to be very watchful about. And we could obviously see a retest of it and push lower from here. Definitely would depend on, the Federal Reserve, depend on interest expectations from markets as well as that. For the oil market, very interesting one to look out for. In last week we had solid push to the upside, was up about 7% in the week last week. But now, yes, still well above the 50 moving average, the 100 moving average in this case here, right? Super interesting. Supply restrictions based on supply, restrictions in supply, right? Based on obviously COVID lockdowns here and there. Yes, keeps prices on the upside for this. But one thing I want us to be watchful about is now that we've pushed so much high, right, over the last couple of weeks now, we are into or we're trading at key level of resistance where if you look back a while, last time we were here, we saw dips from this level around October, November last year, right? Now that we're here, yes, we could say, oil prices are still very much on the bullish side right now. Yes, but with this, I want to be very careful at this level. I don't want to buy into resistance. I want to be very careful. Even in today's session, you can see a lot of slowdown in this region as well. So keep this level as one to be very watchful about. This is the 83 points, 70, 60 thereabout level to be very watchful about. So there's that to watch out for. In FX, we still have a mixed environment. We have CAD leading the majors. Obviously, higher oil prices have kept CAD supported. We also have, and from what I wrote here, we also have Euro also a little bit supported. And then the dollar, this was the dollar, I meant to write dollar here. All right, USD. Okay, right. Now, also with the dollar also well supported on this particular front. While on the other hand, we have JPY lagging, we have AUD lagging as well as the CHF. Moves are still marginal. Biggest mover CAD JPY is only up by 0.42%. And if you just look at, CAD JPY, for example, yes, in today's session, you're seeing that push up, but you can see the momentum has not really been that strong. Yes, above this key 91.00 round number, but if you look up, overboard, if you look across board, I mean, we're still in the middle of no man's land, really. In terms of convictions, it's a little bit slow, especially that we have a very mixed environment. But if you really want to get a bite of this, I really wouldn't, until I see maybe equities. For example, if I see equities now start to push higher, right? Let's say equities, something like the US 500 starts to push higher, give us, something more to deal with. Maybe break above this key 4650, keep above the moving averages, push higher, head to this overhead resistance, then I would be interested in further upside for something like this. But, or if we get oil prices really clear out that overhead resistance, right? Oil prices clear out this overhead resistance right now, which is not even looking likely, then I'll be interested in buying catch it well. But in the meantime, really, I'm going to be very patient with this. For the dollar index, we're really trading within a range. So the majors really aren't giving me something solid to work with for now. But obviously, it's one to keep an eye on. The week will be interesting. We're expecting, numbers from the UK, from Australia as well for a week ahead. We're having the BOJ. So it's still going to be an interesting one to watch out for. But in the meantime, I think it's one of those sessions where you want to be very patient. In the day ahead on the calendar, it's another light one. We're not expecting so much in the calendar today, and it's obviously bank holiday for the US in the session ahead. So sentiment will be key. Interesting to watch out for, interesting to put our minds on. But apart from that, I think lower volumes coming up later could see markets remain in a very range bound, very lackluster performance for the day as we head. But keep a close eye, keep trading simple, and then if you have any questions, please do not hesitate to ask. I would always do our best to help. Thank you. Do enjoy the rest of the trading session. Goodbye for now.